Good morning, traders. It is Thursday, May 8th. All right, a lot of you are asking about the panic selling indicator and the FOMO indicator and a whole bunch of other stuff. There is a ton of videos that I do want to work through over the next year or so. I've got about 300 videos lined up that teach trading and all of that stuff, all kinds of different custom tools. I just want to remind everybody that if you want to really learn the markets, and this is the panic selling indicator to know when to be looking to buy dips within an uptrend. This is the panic selling indicator, which spikes across the bottom when it's over 3. If you want to learn when to know when to be looking to sell the rips, meaning when something rips higher within a downtrend, when you should be looking to, if you're long, to get out of those positions or buy an inverse ETF or short the market for the drops that come after that. This is the FOMO indicator when it spikes up over 3. This is the greed. I call it greed buying indicator, FOMO. It's people chasing pricing. Everybody's doing the same trade. They're buying shares hand over fist, expecting it to go higher. And usually that is a warning, early warning sign that the market is about to have a quick pullback. And then on top of that, you need to understand when to identify short-term trend when it's up, when the trend is down, when to identify when to buy and trim, and repeat through that. And in a downtrend, when to sell, when to cover, or when to buy an inverse ETF, when to cover. All this stuff is in my book and a ton more. If you go to Amazon, it's actually, I'm the #1 bestseller for online trading, for technical trading mastery. Along with a bunch of other categories, #2 in financial risk management, #2 in financial risk management for books, a whole bunch of different stuff. In this book, it's not just about these indicators. I know you all want me to do a video on these indicators so you guys can jump in and trade them. The thing is, most people need more than that. You're going to get yourself into trouble. It's just enough information to hurt you. This book is a very quick read. It's like 130 pages, lots of charts, so not that much reading. But you need to understand how the market works, the reality of the goals, the bottom line of trading, having the right expectations, the life of a technical trader. You need to really figure out what type of trader you are. All of this plays huge roles. You need to understand all of these different things. Many of you have seen me cover the 4 stages of the markets and how to recognize them and all of that stuff. The things you're going to be really interested in most likely are going to be chapter 11, which is volatility is your friend. This is the hybrid indicator. This is going to show you how to identify overbought, oversold, when to trim and plant or buy and sell. And then, of course, the next chapter 12 is the power of sentiment, FOMO and panic. Both are fear of losing more money, fear of missing out on gains. FOMO is very powerful. People find it way more powerful or painful to miss out on gains. So all of that is explained in the books along with a lot of other stuff. Trust me, this book is, I'm not a big reader. I trimmed this book down. It is just everything you need to know in a nutshell from a high level, the reality of trading, just like my kind of dull voice, monotone videos every day. This book is like the reality of things, and there's no hype. There is nothing in there that's going to fluff you up and you'll get fired up because this is the real stuff of how to follow the markets. Of course, if you're more so of an investor, asset revesting, if you want to just grow your entire account and not get into the nitty gritty of technicals, asset revesting is the book that does that. So again, if you like this channel, you like what I'm sharing here, I will be working through several hundred videos of all of the stuff taught in these books over the next year or two. There's a lot to go through, but subscribe to the channel. Let me know what you want us to cover. I did cover some topics today in the video that were in the comments from yesterday. Take care. Taking a look at the charts, equities are set to open higher this morning. We got the Nasdaq up, or the SP 500 up 0.9%. The Nasdaq up 1.25%. You can see on the daily chart a nice pop here. Nice bull flag pattern forming. Now, I'm not a fan of gaps to the upside. As you know, gaps tend to get filled. That being said, there are gaps lower on the chart. Let's just go to the SPY where we see opens and closes. We do have a few gaps on the chart. We do have one pretty big gap way down here. So gaps to the downside still need to get filled. So I'm not really too concerned. At this point, we really just want the market to gap and go and push up, break this high right through here. And I think that'll create somewhat of a short squeeze of anyone short. saying, hey, if it breaks this high, get me out. And as the shorts cover, it creates a bit of a short squeeze, a bit of a buying wave. So that's what I'm just hoping for. This market will push higher. You can see yesterday's price action on the 10-minute chart. We had the Fed come out in the afternoon. It created a bunch of noise on the chart, big volume, back and forth, relatively small range. And then, of course, we've seen an overnight trading, a big pop and move up here. And if we just look across here, the S&P 500, a 3 days ago, that high, which is the high over here, it's testing that level. It's the same with the Nasdaq. We're right up at this level. This blue line is the high from a few days ago, and it's kind of testing that level and kind of hitting it. Now, we do have a price gap or a spike, which I haven't talked about in a long time. We're getting into this market up situation that when volatility is kind of normal and down in this lower range in the 20s and below, price spikes tend to start to come into favor, meaning wherever this spike is, I've got these levels, a third, 50%, and 100% of that move. Typically, what we see is when we have a price spike, the market wants to come down and hit one or all of these levels. When we have a gap on the chart, and we have a spike saying that it could get down there, then usually this is a signal that the market is going to want to fade back down into that level. So I wouldn't be surprised if today's pop higher, which is going to, if we look at the 30-minute chart, is going to gap up right here into resistance, right into this high. And, excuse me, probably going to see it sell back down to yesterday's highs or to the close to fill that price gap, which will also fill these price spikes on the chart. Now, I don't know if I saw that on the S&P 500. There is a little spike here. It's already coming down, filled half of it. These are something that show up only in pre-market. I've got my chart set up to show these, and they happen to the upside and the downside, and they give us insight as to where the market should want to run for just that day. Overall, let's go take a look at what else. So money's flowing into stocks today. It is flowing out of the defensive plays, which are bonds and gold. We are seeing TLT or bonds move down about just a little bit, 0.2%. They're actually just starting to find a little bit of a bid in the last 40 minutes or so. So they're recovering back. But money's flowing out of the boring kind of bonds and gold and into the risk on, into stocks. Gold hit resistance. It's pulling back. You can see gold went from our oversold level here. This little, I think we can see a B somewhere in here. Buy signal, an oversold buy signal within an uptrend. It came up, hit a target. Now it's going to consolidate and pull back a bit, and maybe it's going to take another run and head up towards that 37.50 area. Either way, we'll see how that unfolds. With our band strategy, we are long gold. We did pull off half of our position up here for just a really quick 4.5–5% gain, and now we're just going to see if it wants to go any further. Now, money is moving into Bitcoin this morning. We're seeing Bitcoin have a nice push higher. It is breaking out and running. So that's an interesting sign as it's starting to push up and start the next push into this resistance area, which we've talked about. The monthly chart does point to 135,000 per Bitcoin if we do get the setup and the breakout, but we're not there yet on the monthly chart, but it is definitely showing signs of strength. If we take a look at energy real quick, oil up 2%. It's all over the place. Again, it broke down, had this bounce, came back down, is testing a little bit of a double bottom. I talked about yesterday how this is a technical bounce. It might want to bounce back up somewhere here into this area and maybe even test this $65 per barrel level. No real insight on oil other than it has broken down. I believe it will go lower in due time. And again, of course, it's just kind of trading in these in a downtrend, and a series of sell short kind of gets overbought with these shaded areas and then continues to sell off and moves lower. So overall, it's just kind of trying to find a bit of support and might have a bit of a bounce temporarily. If we take a look at XLF, a few of you wanted to look at the financial space. No real insight here. Let's just zoom out. A lot of damage has been done to all the charts, pretty much, other than gold. It's just bounced up and it's trying to break this high. It's very similar to the S&P 500, the Nasdaq, so I don't see a whole lot of insight here. I do believe eventually financials are going to get absolutely slaughtered. They are on the cusp, in my opinion. Even though the Fed and all these systems say, oh, they're stress tests, they're good, I don't believe any of it. I believe eventually the banks are going to be left holding all the credit card debt, all the mortgage and commercial real estate, all that stuff is going to get hit. And the same thing's going to happen. The banking system is just big, bloated. It's got all kinds of problems. Lots of leverage, no real risk management there. And they'll get wiped out when no one pays their debts. If the market does go off a cliff and we go into that kind of recession, depression, whatever people are calling it, there's all kinds of different things. It's just a big bear market, a financial reset. They're healthy, but they're not very comfortable. And they hurt a lot of people during the reset. Let's see the dollar. The dollar is moving up this morning. We're seeing it move up about 0.33%. We talked about it carving out this little baby inverse head and shoulders right here. We got this neckline. And so it is still trying to break this horizontal level. So it's definitely still in this bottoming phase, but it feels like it's got a rally, a little bull flag, a rally, a bull flag. The key moving averages are still layered in a bearish way. If we take a look, zoom in a little bit, the 5-day moving average is under the 20-day. The moving averages are pretty much all sloping down. So if we do get one more big pop here and it starts to move higher, I think we'll get the crossover. And that's one thing that I like is the 5-day above the 20-day. I also like price above those two moving averages and the 20-day sloping up and all of that. So we'll see how that unfolds over the next few sessions. But it looks like the dollar is trying to put in a bottom. And again, if the dollar puts in a bottom, let's just take a look at the dollar index. If we take a look here, I guess I could have used my own chart, but it's come down. It's run these lows. It's run several different lows. In fact, I'm going to pull up my own charting so I can actually draw here. If we take a look at the dollar index, we go to the monthly chart. You can see we've got a lot of different layers through here. We have this pivot low. We have this pivot low. These are very significant levels. Obviously, this is a level of somewhat price kind of popped above it, traded above it and bounced and then broke below it. Got its head, market got stuck under it. It got stuck under it, finally busted through it, found support in this whole area, kind of multiple times, a little bit above it, but in this general area. And the market loves to break these blue lines, these pivot lows. And that's what creates a flush out. It means, okay, it's breaking multiple lows. It is. And that's why we see this huge panic wave here. Lots of selling. Everybody hated the dollar, and they still do. It feels like anyway. And I believe it's kind of a running of the stop. Typically, if you were to put your entry order where your stop would be, and you actually sit back and wait, it would have been triggered like right in here if you were, if you hated the dollar or you wanted to get in. And now the market is probably going to start to move up. And if the dollar does move up, then we're probably going to see gold and everything start to sell off in a big way. This is the monthly chart, so this could still take several months to play out. It could have a bar here, a bar over here. It could play around for another month or two. But if the dollar goes up, probably going to see gold sell off and put in that top that we've been talking about. Long term, I'm bearish on gold. Short term, we're still bullish on gold. So don't get those confused. That is probably the number one problem is people get confused with our time frames. I'm always looking long-term and short-term. In fact, I'm always looking multiple levels from long-term monthly to daily chart trends that we look at for the overall market. And then we look at the 30 minutes. So I always look at the market 3 different views. I mentioned this yesterday. Whichever your time frame is that you're focusing on, if you can't grasp them all and get a feel for it, you will eventually, I think, over time. But just focus on the time frame that you're focusing on and that you click with, and eventually try to weave in the analysis that I do on different time frames, because they all play into each other, and it gives you a really well-rounded feel of the markets.